Greetings, dear learners. My name is Mr. Simbi, and welcome to today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center, and it is being broadcasted here at the Pakama Research and Development Center. Today is a very interesting day because we are just a day away, a few hours actually, from the prelim examination, which is paper 1. And I know most of you are worried. Today, you did well by joining today's class, because in today's class, I'm going to address some very important aspects that will help us as we are preparing for tomorrow's paper. What you need right now is to get a pen, a pencil, calculator, get somewhere to write. You need somewhere to write, and then we're going to have class going on. Now, in the previous session, you would find that there were aspects that were covered. And one of the aspects that were covered was the statement of comprehensive income. So this was covered in the previous session, as well as the adjustments to the financial statements. This was properly covered in the previous sessions. Now, in today's session, my objectives are very clear. As we are preparing for our paper 1, which is just a few hours away, we are going to do the statement of financial position. I'm going to be focusing on the balance sheet, as well as the cash flow statement, as well as financial indicators. So I'm going to be looking and focusing on these 3 aspects. I'm going to give a few important information that you need to practice in particular areas as we are preparing for tomorrow's paper. Now, it is very important as we start the balance sheet that you know your format. In preparation for any examination, you need to know your format, because within the format, you are able to take information from the list of balances and you simply place it on your format. Now, the format of the balance sheet is of great importance. Now, you need to know that your balance sheet is split between your assets, which is what you have here, as well as the equity and liabilities. So you have 2 parts that forms the balance sheet: your assets on the top, and then the equity together with the liabilities. And then your assets are split into 2 again. That is your non-current assets. Remember, these are assets that exist in the business for more than 1 financial period. So under that, you have your tangible assets as well as your financial assets. Your fixed deposits, your investments, you'll find them under your non-current assets. And then under current assets, you have your 3 now. You have your 3, all right? That is your trading inventory, and you need to know the notes that then relate to these aspects. So under your current assets, you have number 1, your trading inventory, and your trading inventory, it is note number 4. And then your trade and other receivables, which is note number 5. And then your cash and cash equivalents, which is note number 6. Remember now, as you are doing your balance sheet, your total of assets, which is what you see here, must be the same as the total of your equity and liabilities. You will see as I do the activity that I have here with me, that when you get a total in your assets, it must be the same as your equity and liabilities. Or when you get a total in the equity and liabilities, it should be the same as with your total assets. And then when you come now to the second part of your balance sheet, to the other half, that is where you have your equity and liabilities. And in that part, you're going to find now your first part is the equity. Equity is formed now of 2 aspects, which is your ordinary share capital, remember, note number 7, as well as our retained income, which is note number 8. I'm going to be doing these 2 notes today. So if they give you a challenge, please, I want you to remain on this platform. Remember, keep your pen, calculator ready, because we're going to do some interesting calculations today. Under your non-current liabilities, you'll find now your mortgage bond. Now, this is to be repaid over a long period. We're talking a period longer than 12 months. This goes now under your non-current liabilities. And then lastly, we have our current liabilities. Under our current liabilities, we have our trade and other creditors, that is your trade and other payables. And then you have your bank overdraft, your short-term loans, you also find them there. It is very important that you also remember that your shareholders for dividends can also find itself there if it's not included in trade and other payables. But your shareholders for dividends, keep in mind, we also need to put it under our current liabilities. Now that you understand the format, dear learners, I don't want you to take chances as you go on to the examination tomorrow. You need to know your format. You need to know your formats. There is no excuse there. You need to know your formats. All right. Now, we want to quickly go now and we want to start doing some calculations. All right. Now, it is very important, before I even touch the calculations, that your bank overdraft must appear on the face of the balance sheet. This is of great importance. And then it is also important to know that creditors will include SARS income tax that is payable, as well as shareholders for dividends. So remember, I had already indicated on that aspect. And then I want us now to start with our activity number one. Okay, if you're ready, our activity number one is going to come from the NSE June 2022. So this is a very fresh paper. All right, it's this year's paper, June paper. We're going to start with question number one. Okay, if you guys have your pen, pencil, and calculators ready, then let's start. Let's go. Now, the question reads, this is Prudence Limited. The information relates to the financial year ended 28 February the year 2022. And then it says, required. Complete the following notes to the financial position. That is your balance sheet. They want us to do the ordinary share capital, note number 7, as well as the retained income. That is your note number 8. All right. And then each one is fetching 7 marks. All right. So let us go. I want us to attempt these 2 questions. The information then says, extract from the accounting records. So what you have there is your balance sheet accounts, and then you have retained income as well as ordinary share capital. Now, I want to see what more information do we have. Okay. Now, if you go on to the next slide, you'd find that your ordinary share capital, it is 7,954,000. And then there is the information now. It says on 1 March, 75% of the authorized share capital of 1.2 were in issue. All right. So if we want to know the number of shares that were in issue here at the beginning, because 1 March is the beginning. Are you still following me? 1 March is the beginning of the financial year. If we want to know how many shares were there at the beginning, we are going to take our authorized. You remember, you now know what is authorized, the maximum number of shares that a company is allowed to issue. So you take your 1,200,000, your 1,200,000, and then you are going to get 75% of that. All right. And if you calculate that, how much do you get? Please, I want you to calculate that. Put that in your calculator. Your 1.2 million multiplied by 75%. I want you to punch it in. Someone give me the figure. How much do you get? Thank you. Someone is saying you get 900,000. So you get your 900,000. Okay. So what it means is that at the beginning, there were 900,000 shares that the company had issued. And then they go on to say they issued another 80,000 shares. 80,000 shares were repurchased rather. Here, shares are being repurchased. And then they give us all the information. Now, it is very important for us to know, here it is, my 1.2 million, and then multiply by 75%, as I had done earlier on, that gives you the 900,000. Now, it is very important that you get to know the number of shares that you have at the beginning as well as at the end. I'll show you later how the calculations will come out. It is very important that you know those number of shares. Now, if you want to know the number of shares at the beginning, at the end rather, you say at the beginning we had 900,000, okay, which is your 900,000 here. And then we repurchased. Once we have a repurchase, we subtract that. So we say minus 80. because it is a repurchase. Once there's a repurchase, you subtract it. And then there are new shares now which have been issued, which is your 150,000. Then you say plus 150. So at the end, you're going to end up with 970,000 shares. You're going to see when I open my note number 7 in the following information, how this will come out. Remember, at the beginning, we had 900,000. That is what we had at the beginning. And then we repurchased. And it is very important, dear learners, when you go to the examination center tomorrow, I want you to approach the information the way the examiner has prepared it. What comes here? This is the first information, shares at the beginning. This is your number 1. Your number 2 is this one here. What do you have? Shares repurchased. Then number 3, if we're talking about shares, it is this one here, additional shares. Do not rearrange them in the order because it also has to do with the date. 1 March, 30 August, as well as the 1st of December. So the examiner deliberately puts the information in this way for a reason. When you go to your note number 7, you must see the information also relating to the dates that we have just seen here. It must be the same as the dates that we have seen. All right, let us now see how it will look like. All right, now when we are looking at it, and then we want to look at the repurchase of shares, we want to calculate the repurchase of shares. When you look at the repurchase of shares, they're telling us already that we paid an amount of 136,000. We paid 136,000. That is on the repurchase of shares. But if we are now going to calculate some amounts, it is very important we understand here what is happening. If I would explain it, you would remember the triangle. You'd remember the triangle. You must have done the triangle in your class. Okay, so here is the triangle. On the top, it is your repurchase price. Your repurchase price. And most of you would say, Mr. Simbi, this goes to the cash flow statement. The repurchase price, the one that goes to the cash flow statement. And then on the side, you then get your average price. Your average price, this is what goes to note number 7. And then here, some of you call it the difference. Some of you call it the amount above. All right. So I'm just going to say here the difference or the amount above. This goes now to note number 8. According to the information that we are given here, it says when we repurchase shares, 80,000 shares were repurchased from a retired shareholder, and he was paid 20%, that is 136. So we know that the difference here is going to be 136,000. It's going to be 136,000 here, 136,000. But that 136,000 is equal. It is equal to 20%. That 136 is equal to 20%. The information is given. It is very important now for you to know that if you want to get your amount that goes now to note number 7, okay, the amount that goes to note number 7, you have to now say what is it that you want, because here they said he was paid 20% above the average share price. All right, so whatever we paid him was 20% above the average share price. What it means is what we paid this shareholder was 100 plus 20. So we paid him 120. All right. Therefore, what is the 100? The 100 becomes the average here, 100%. Are you still following? So if I want to know what was the average that I paid, I'm now simply saying, what is it that I want? I want 100. What do I have? I have 20, and that 20 has a rand value which is 136,000. So it's going to be 100 over 20 multiplied by 136. Please punch that in your calculator. Tell me how much do you get? You will get an amount of 680,000. 680,000. All right. Let's see when it comes out nicely. There it is. When we are looking at the repurchased shares, This is the amount that I'll take now to my note number 7. To my note number 7, I'm taking the 136 multiplied by 100 over the 20. All right, remember, I explained it nicely here. And it is important that you come back again to your triangle. All right, now, dear learners, it is very important, especially when you have to calculate the average price now. All right, so when you're calculating the average price, I'm just going to rewrite what is there. When you calculate the average price, we're now saying it is your amount that you paid. Remember how much we paid? We paid 680,000. All right, we want average price per share. Average price per share. So you're saying 680,000 that we paid, divide it now by the number of shares that we have repurchased, which is your 80,000 shares. If you do that, that is how you get your 8 Rand 50, which is what you see over here as well. 8 Rand 50. Okay. Now, it is very important that you get this 8 Rand 50 because there is somewhere we are going to use this amount. Now, let's come now. This is our note. Remember, at the beginning, we were told that, so this amount here was not given, but we calculated this 900,000. Should I remind you, how did we get it? We said 1,200,000. We said 1.2 multiplied by 75%. That is how we got the 900,000. But here we don't know how much it is. Hence, you see my question mark. Okay. And then we repurchased 80,000 shares. This one was easy. But when we repurchased the 80,000 shares, we were told that we paid 136,000 above. So we remember, we just did a calculation, which gave us 680. So we get our 680 here. Now, if we use that 680, trying to remind you, if we use that 680, this is what I just did earlier on, 680. If you divide it by this 80,000, that is how you get the 8 Rand 50. So you get an average price of 8 Rand 50. That is your average price. Are you still following me? It therefore becomes easy now. You have to understand this principle. I'm going to explain it and I want you to pay attention. That the only thing that changes average price is a new issue of shares. So what the examiner did here, they gave you shares at the beginning here, but they did not give you any Rand value. Then they gave you a repurchase, which is over here. Then they're telling you how much you are paying for that repurchase, which is 680,000. That means if you are able to get the average price on the repurchase, it should give you an indication of what was the average price before we repurchased shares. I'll repeat again. The average price that you are indicating on your repurchase, the 850, will be the same average price that we have on our shares, as long as there was no issue of shares in between. Because the only thing that changes average price will be the new issue of shares. So the average price that we're having here at the beginning, balance on the 1st of March, the average price here will be the same as the average price here. That's what it means. That's what it means. Okay. I know most of you are used to the one where you calculate from the bottom going up. But in this case, the examiner wanted us to do it from the repurchase of shares until we get the balance at the beginning. That is 1 March 2021. So I can safely say now, when I am not given my average price at the beginning, but I am given the average price at which shares were repurchased at, yet there was no issue of shares from the beginning until the repurchase, I can then get the average price from the repurchase, then use it to get my average price at the beginning. In other words, the same 850 is what I would then use here. So I can then say the shares here were having an average price of 850. The same as this one there. All right. So if I multiply that by 850, please punch that in your calculator. We are now saying 900,000 by 850. How much do you get? Thank you. 7,650,000. 7,650,000. Okay. And then remember, we also spoke about the new issue of shares. They issued shares, 150,000 shares, but they also did not tell us what was the amount that we received from the issue of shares. That should not be a big issue. Tomorrow, I want you to understand that the examiner is going to bring the paper in such a way that you must be able to get some figures. Whatever you are not getting, you must either be getting it from the top going down or from the bottom going up. So you need to look at all these options, from the top coming down or from the bottom going up. All right. So what we are certain of is, remember, we did get the 970 here. If I say my 900 here minus the 80 plus the 150, it will give me 970,000, which I have over here. All right. And then this was given already. This was given. Remember, it was in the list of balances. The 7,954,000, it was in the list of balances. Now, if I now have my balance at the beginning, therefore, I should be able to get my amount here on the question mark. I should be able to get that. Okay, so it is simply a calculation whereby you are starting from the bottom, going up now to get this amount here. All right, so what would you do? If I'm to show you, you would simply be saying 7,954,000. You're going up. So when you go up, you do opposite of the signs. You do opposite of the signs. Or you can simply say, when you go up, you subtract, but when you go down, you add. You can also apply that principle. You go up, you subtract, but when you go down, you add. So in any case, you get the same amount. You go up, you subtract, you go down, you add, or you can say, go opposite the signs. When you go up, you do opposite. So it's going to be 7,954,000. Then you're going up. So you're going to do opposite of that. So it's going to be plus 680,000 and then minus 7,650,000. Please punch that in your calculator. How much do you get? Someone is saying, I get 984,000. 984,000. That becomes your question mark here. 984,000. You get 984,000. All right. Now, it is very important. There it is now. There it is. There it is. So here is how I got my 984,000. You remember how I did that. Okay. And there is my calculation once more. That is how I got my 984,000. Dear learners, I want you to remember this when you're in the exam room tomorrow. The examiner will either want you to do it from the top going down or from the bottom going up. But the one thing you must not do is to change the arrangement in note number 7. Focus on the dates. You're beginning and then check the next one as they are given. It would be a serious mistake if you would move your issue of shares up there, then you come with the repurchase, because it means you are changing the average price already. Do not do that. Follow the order in terms of dates that the examiner would have given you. Okay. Now that we have our note number 7 in place, or note number 7 in place, the next information now, remember we have extracted information from this paper so that we can calculate it, and then eventually we're going to send it all to the balance sheet. Okay, so even what we got, the 7,954,000, should be going straight to the balance sheet. But there is some information already that was given on your SARS income tax. Let us see. It says, the income tax provisional payments, provisional tax payments. So the provisional tax payments, these are amounts that we're paying over to SARS during the financial year before we have received our actual tax that we must pay over to SARS. Because remember, we only know that after we have calculated our net profit before tax, we calculate income tax, then we know how much tax it is. But during the financial year, we'll be making payments over to SARS. And these are what we call provisional tax payments. So if I'm to say it in simple words, it simply means we don't know how much we must pay at the end of the year, but we don't wait until the end of the year. We start paying tax over to SARS already, start paying. All right. So one of two things are going to happen. We're either going to pay much to SARS or we're going to pay less to SARS. But what we're given in this information is we have already paid 450,000 over to SARS as provisional tax payments. Then the information then tells us that income tax for the year after taking all adjustments into consideration is 438,000. This is income tax for the year, 438,000. And this is 30% of my net profit. It's 30% of net profit. What it then means is when I want my net profit after tax, you have to understand this simple thing, that your net profit before tax, your net profit before tax is always 100%. Okay? And then your income tax, in this particular case, they're telling us that it's 30%. And income tax must be subtracted. That will give you now your net profit after tax, which in this case will be 70%. But we are also told that we have a rand value for this 30%, which is equal to 438,000. So if we want our net profit after tax, remember, we are thinking note number 8 in mind now. Knowing the format of your note number 8, what do you start with? Balance at the beginning. What comes next after that? Net profit after tax. So already I'm thinking in line with that. Okay, so I have two things that I need to talk about here. Two things that I'm going to talk about. Number one, it is the net profit after tax. I need to know how much is my net profit after tax. For me to get that, I'm now going to say, what is it that I want? I want 70, which is this one. What is it that I have? I have 30 multiplied by the 438,000. How much will it give you? It will give you an amount which is 1,022,000, which you see up there. So that now goes to your retained income note. Remember, note number 8, balance at the beginning, and then now I have my net profit after tax. Very important. But when you are still there, the examiner has already told you that you are preparing a balance sheet, statement of financial position. Therefore, in this case, it means you should be able at this level now to know that if I have paid provisional tax payments, I would have paid either more or less. So you now need to look at who is owing who. If I'm to say it in simple words, who is owing who? If I paid more to SARS, therefore SARS is owing me, that amount becomes receivable in that case. But if I paid less to SARS, therefore I still owe SARS. Therefore, the amount that I still owe becomes payable over to SARS. Let's look at the figures that we're given. My income tax is 438,000. Yet my provisional payments here 450. I've paid 450 over to SARS. It therefore means if I get the difference, I'm going to get how much? This one is an easy one. I'm going to get 12,000. Therefore, the question then is, if I'm to say it in simple words, who is owing who? Income tax, 438. We have already paid 450 as provisional tax payments. In this case, who is owing who? SARS will be owing the business. In that case, it becomes a receivable. So this goes to trade and other receivables. I'm talking note number 5. Note number 5. Remember, I'm doing the statement of financial position. So I must be able to see the 12,000 in my note number 5 when I go there. Okay. Now, here it is. When I'm now in my trade and other receivables, there is my 12,000 as well as my 1,022,000. So the moment the examiner gives you your SARS income tax, tomorrow think two things. two things. Okay? How many things? Two things. Where, number one, it is your retained income note. I need to get net profit after tax. But then at the same time, think as an accountant, you also need to get an amount for your balance sheet. Trade and other receivables or trade and other payables. In this case, it was trade and other receivables. And how much was that? 12,000. Now, dear learners, I know you are able to do this. You just need to do more practice, and tomorrow will be a walk in the park. I believe so. All right, let's look at the next information that will be coming. Extracts from the accounting records, all right, and then we're given retained income, which is 1,196,000. And then we again have that information B. You remember we had done some calculations on it already. Okay, so let us now go. And then information C, income tax for the year. And then we have already dealt with it here. You remember that we've already dealt with it. Okay, so let us go again. It then says 80,000 shares were repurchased from a retired shareholder. Remember the repurchase of shares. He was paid 20%, which is 136,000 above. Okay, remember we have already addressed this. If you remember the triangle, I showed you that on the triangle, it is the repurchase price, which goes to your cash flow statement, and then it is your average price, which goes to note number 7, and the difference or the amount above, that is what goes to note number 8, which is your retained income. The amount above or the difference, the amount above or the difference. In this particular case, the amount above or the difference was 136,000. So when I come here, I'm now saying my shares repurchased, and I know before I do anything, I have to put my brackets. Tomorrow, dear learners, when you're reading the question paper together with the answer book, in your mind, you must see already places that you must put brackets when you're doing your calculations. Don't forget brackets. Please, I repeat, don't forget brackets. So my shares repurchased, I need to have my bracket. And how much am I looking at? 136,000. This one was given away. It was a giveaway. Okay, so this one was very easy for me. The 136, I bring it onto my retained income as shares repurchased. Okay, and then says an interim dividend of 28 cents per share was paid on 31 August 2021. An interim dividend of 28 cents per share was paid on the 31st of August. So if an interim dividend is being paid here, dear learners, you need to know how many shares was I having for me to give interim dividends to. So you need to remember my note number 7 is related to my note number 8. The number of shares in your note number 7, you remember, will also speak to the number of shares that you must give dividends to. So let us see if we look at that. Now, they're saying an interim dividend was declared, and then it was very important. This aspect said the shares repurchased do not qualify. The shares repurchased do not qualify. They said so in the information. The information said so clearly. The shares repurchased do not qualify. And when we look now at the number of shares that we were given, we had 900,000 shares at the beginning. That is here. This is at the beginning. We had 900,000 shares. And then these were repurchased. Okay. And then we now have 150 being issued, but it's being issued on the 1st of December. But the interim dividend is being declared on the 31st of August. So on the 31st of August, when we're declaring the interim dividend, we had 900 minus 80. It is 900,000 minus the 80. Okay, dear learners, how much would that give you? That will give you 820,000. So we had 820,000 shares to issue interim dividends to. And the examiner was so explicit in this particular case. He was so clear that these shares do not qualify for dividends. So we will not stress whether to give them or not to give them. The examiner has already told us that the shares that we repurchased will not qualify for dividends. And then, what then do we do? Let us go and see. When we are now giving dividends, when I'm giving now my interim dividends, I'm now saying my 820,000, remember I got it already, 820 multiplied by the 28 cents, which is what I have here, it will give you 229,600. That is my interim dividend. And then I will then take the total here, and it will give me 443,000. 443,000. Okay, so I now have my 443,000, which is my ordinary share dividends. I have my shares repurchased. I have my net profit after tax, but I still don't have my balance at the beginning. But I should have been given my balance at the end as well. It was given in the information. Okay, if you check closely in the information, the balance at the end was given. Okay, someone check for me, how much was that balance? You can see it was 1,196,000. It was given 1,196,000. So if you have 1,196,000, this is now the balance at the end. If I would say on 28 Feb, that is 2022. This one was given already. Okay, therefore I need to get the balance here now. So the same principle that we did in note number 7 will apply again. Going up, you subtract. So in other words, you're going to use your 1,196,000, you add your 443, you add your 136,000 here, then you subtract your 1,022,000. You're just doing the opposite when you go up. You do the opposite. Once you do the opposite, then you're getting the amount that we desire. All right, so here it is now. So what do we want? We want this amount here. Okay, and if we want that amount, we have already agreed. Once you go up, you subtract. If you're going down, you add. So you're going to say this minus minus, that's a plus, minus minus, that's a plus, minus this one. So you get your question mark up there. Some say you just do opposite of the sign, which is very correct. Just do opposite of the sign when you go up. Do opposite of the sign. Then you end up with 753,000. 753,000. Okay. Now, when it's already done, this, remember, was my note number 7. I now need to take this now to my statement of financial position. We're talking the balance sheet. Okay, I need to take it now to my balance sheet. This is where it would come in. There is the amount in my balance sheet under my equity and liabilities. Shareholders' equity, ordinary share capital, 7,954,000. This is where I will find it. And then I need my retained income here. I should be able to get it as well. Remember, we did it already. There is my retained income balance at the end that given it to us, 1,196,000. So when I come here, I have my 1,196,000. This will come down there. So once I have that, then I can get the total, which is up there now, my shareholders' equity. Okay, this should be very easy. This should be very easy. Remember the relationship this shareholders' equity has with your net asset value per share. The examiner can bring that and say, calculate the shareholders' equity. You have to know how to get it when you're using your NAV, your net asset value per share. And then I want us to go to the following information now. It says extract of the accounting records, and then the following adjustments are relevant to complete the statement of financial position. And then the provision for bad debts must be increased by 2,610. So they're telling us that our provision for bad debts must be increased by 2,610. Remember, here we are preparing the statement of financial position. Now, if we were going to exploit this adjustment, I would be saying, here is my 2,610. I would record it in the income statement. I would record it in the balance sheet. Okay, very important. Remember here, they say the provision for bad debts must be increased by. If I'm to say it in simple words, in the income statement, we record either the increase or the decrease. Either the increase or the decrease by. Either the increase or the decrease by. Whereby an increase will be an expense. I'm just putting it in short words here now. An increase will be an expense and a decrease would be income. So if I were to record this adjustment in an income statement, because it's an increase, I would take it now to my other operating income. Then I would say provision for bad debts adjustment 2,610. That is what I would do. But when I am now doing it in the balance sheet, in the statement of financial position, I have to know what was the previous year's provision for bad debts. Therefore, they gave it to me now. The year 2021, it was 23,640. 23,640. Now they are telling me that this year's provision has increased. It has increased. Okay, this is an increase. So if it is an increase, it should be operating expenses here. Operating expenses. Okay, operating expenses. It's an increase, which is an expense. So you should go to operating expenses. Okay. Now, when I look at this, they're telling me it is increased by, so that means when I come to my 23,640, I must increase it now by 2610. I must increase it by 2610. All right. So if I increase it by 2610, how much then do I get? I'm saying 23,640 plus 2610. Someone please calculate it for me. And then we are going to get an amount which is 26,250. This then is what I adjust in my balance sheet. Okay, that is what I take to my statement of financial position, the 26,250. Okay, so I'll come here now to my trade and other receivables. Then I'm going to subtract the 26,250. That is, I've added my 2,610 to my 23,640 because I have an increase. And remember, an increase becomes an operating expense. An increase is an expense, not income, but an expense. A decrease is income. Let's go on to the next one. An extract of the accounting records, and then we're given audit fees. Then they say, the following adjustments are relevant to complete the statement of financial position. Only half the audit fees were paid. The balance will be paid in March. So this therefore is one half. This is one half. So what is owed is another half. Simple. It is another 48,000. That is another half. Okay. So what is this? The other half were paid. The balance will be paid over in March. So what is this then? It becomes an accrued expense. It becomes an accrued expense. In the income statement, I would be adding it to the amount that would have been given. But in the balance sheet, which we are busy with here, I'll take it to my note number 8, which is trade and other payables. Note number 8, trade and other payables. So you would find that I would come to my creditors control and edit. As you see here, I'm coming to my creditors control and then I'm adding the 48,000 because it is payable. Okay. The next one now, extract from the accounting records, rent income. And then it's given as 102,400. The following adjustments are relevant to complete the statement of financial position. A tenant occupies part of the premises on the 1st of May. So a very important aspect. In most cases, we're used to getting the tenant from the beginning of the financial year, but here is from the 1st of May, and he has not paid rent for January as well as February. So if he was within our premises from the 1st of May, the year 2020, 2021, and he paid until December because he did not pay for January. So he paid until December 2021. How many months would that give you? Thank you. Someone is saying 8 months. And then you now say whatever we have here is therefore an amount we received for 8 months. So it's going to be 102,400 divided by 8 months. How much is the rent per month? The rent per month therefore becomes 12,400. And if it's 12.4, they're telling us that he has not paid for January and February. That is 2 months. 2 months have not been paid for. So it's going to be 12.4 multiplied by 2. That is going to give you an amount which is 25,000. How much? You're going to get an amount which is 25,600. 25,600. Okay. I think it's 12.8 here. 12,800. 12,800. If you divide that, okay, someone's 12.8. So if you get it 12.8, you multiply by 2, that gives you 25,600. 25,600. And then that is what you then adjust here. So you're coming here to say now plus 25.6. That goes to your trade and other receivables. They are owing us that amount, which is 25,600. 25.6. Okay, let's quickly go on to the next adjustment. And the next adjustment is saying a fixed deposit is 489,000. 240,000 of the fixed deposit will mature on the 1st of April. So once a fixed deposit is going to mature, it means I'm going to come now to my statement of financial position. I'm going to say 489,000, which is my non-current assets. I subtract the 24, which is now maturing. I'm going to be left with 249. And the one that is maturing, I take it now to my cash and cash equivalents. There is my 240. And remember, I had the 5,000 already given, which was petty cash. So the 5,000 was already given. It's petty cash. So the one that is maturing, you're simply taking it from your non-current, bringing it down to your current assets. And then it says a debit balance of 17,950 from the debtors ledger must be transferred to the creditors ledger. The quickest way would be for you to open your ledger accounts, your two ledger accounts. Here is your debtors ledger. Here is your creditors ledger. Debtors ledger, a plus, a minus. Creditors ledger, a plus and a minus. A debit balance, so here's a debit balance, 17,950. If it must be transferred to the creditors ledger, that means I must write it off from the debtors ledger. I'm taking it out, therefore I'm coming now to the credit side, 17,950. To complete double entry, I'm coming here, 17,950. So it means when I now go to my statement of financial position, I am now going to go to my trade and other receivables, and I am now saying it has to be amount which I am now subtracting. So it has to be minus, it has to be a minus here, minus 17,950. The sign should be a minus. So here it's a minus 17,950. As well as when I come to my trade and other payables, it must be a 17,950 because it is a debit balance of 17,950. Here's my debit balance in the debtors ledger. So it's a debit balance of 17,950 in the debtors ledger. And then when I'm writing it off, I'm putting it on the opposite side. So here it must be minus 17,950. Here as well, minus 17,950. I'm following these signs here. Minus 17,950 minus 17,950. This is trade and other receivables, which is your note number 5, trade and other payables, which is your note number 9. Okay, so it has to be minus 17,950 as well as another minus 17,950. Okay, let's quickly go on to the next one. It says the following financial indicators were calculated after all adjustments were processed. Number 1, current ratio, and then the debt equity ratio. Okay, so if we're going to use the current ratio, we're now looking at our current assets, which is 2,080,000, as well as the information that we're given. So far, we were given information which relates to our current liabilities. Remember, we got this from our note number 8. It was given. And so far, we have done the 617,450 plus the 48,000. Remember that one that we're owing for that adjustment. And then minus 17,950, the one that we just did now, minus 17,950. And then we get 647,500. But then we now need to get the total current liabilities. How do we know that? Because we're given the current ratio. Once you're given the current ratio, you have to know the formula for the ratio. And here it is, your current assets as to current liabilities. And then you are given your current assets, which is 2,080,000, as to your current liabilities. And the answer to them is 1,6 as to 1. So we will then cross multiply. That means it's going to be 2,080,000 as to 1,6. That is your current liabilities. So if you want to get your current liabilities, you're simply dividing both sides by 1,6. Divide both sides by 1,6. Therefore, your current liabilities will then be equal to, please quickly punch this into the calculator. Tell me how much do you get. Your current liabilities therefore give you 1,300,000. So you'd come here, your current liabilities therefore becomes 1,300,000. That is how you get your current liabilities, 1,300,000. Now, if we are to quickly look at it, you would then find that it is very important, dear learners, that you, I'm just going to go back here. All right. I want us to go back to the one that I was busy explaining. The moment you get your current liabilities, it is very important that you also know that there will be some missing information that you have to get. So here, your current liabilities, remember, it has to be 1,300,000 here, 1,300,000. Therefore, we still need the current portion of loan as well as the bank overdraft. We still need the current portion of loan as well as the bank overdraft. But if you look in the information, they told us that the bank overdraft, it is the balancing figure. This, they said, it is the balancing figure. Let's see how that will come out. Okay. Now, it says extract of the accounting records, loan, and then it is XY loans. And then we're given the debt equity ratio, which is 0.4 as to 1. And then the loan from XY loans will be reduced by a capital portion of 228 in the next financial year. That means the loan is going to be reduced by 228. In other words, that is going to become our current portion of loan, the 228,000. Okay. Now, you should be given your shareholders' equity. There it is. Now, the moment you are given this information is not going to work at this moment so far, but what we need is the shareholders' equity. Now, you're going to use the debt equity ratio, So as the name says, debt, that means you need to start with your debt if you want the formula. Debt, which is your non-current liabilities, as to shareholders' equity. Now, my non-current liabilities, I do not know as of yet. So I'm just going to say my non-current liabilities as to shareholders' equity. I don't have my non-current liability as to shareholders' equity, which is 9,150,000. You can see it over here. There it is. The answer, therefore, becomes 0.4 as to 1. That is the answer, 0.4 as to 1. And then if I am to get my non-current liability, I'm cross-multiplying here, therefore. Okay, so my non-current liability is equal to 9,150,000 multiplied by 0.4. So multiplying it by 0.4. And you will get your non-current liabilities, which is your 3,660,000. That is what you get, is your non-current liabilities, 3,660,000. Once you get that amount, it should then be easy for you to record in the statement of financial position. There it is. Your loan, 9,150,000 multiplied by 0.4, which gives you 3,660,000. Okay, you have to understand that at this adjustment would have already been considered, because we only calculate financial indicators from the amounts at the end here, the final amounts. So this adjustment will only go to your note number 9. All right. Now let us see when we go now to our note number 9. There it is. The 228,000 will now come to your note number 9. There it is, 228,000. So it will come to a point whereby you have your 1.3 million, you have your 647,500, you have your 213, you have your 228, but you still don't have the bank overdraft. Then you just say the 1.3 million minus 647 minus 213 minus 228, then you get your 211. Remember, I told you that in the paper they'd already told us that this is the balancing figure, so you had to get it as your balancing figure. All right, I want us to quickly now see how all would appear. This is how it will appear now when it's properly finished. This is where it is properly finished. Now, when you now come, you now have your current liabilities. Remember, your 1.3 million, your non-current liabilities, 3,660,000, and you also have your shareholders' equity, 9,150,000. When you add these three amounts, they'll give you your total equity and liabilities here, which is 14,110,000. So, in other words, you are adding your shareholders' equity plus your non-current liabilities plus your current liabilities. When you add those, they give you your total equity and liabilities. The moment you get a total equity and liabilities, you should know this should talk already to your total assets. You should talk to your total assets. Are you still with me? All right. Then let us see. That means I already have my total assets. The same amount as I had in my total equity and liabilities becomes my total assets. And then I would then say, remember this one was already given. It was already given. So if I'm now going to get my trading inventory, remember I have my cash and cash equivalents, I have my trade and other receivables, and I have my my current assets rather. I have my current assets total already. So if I'm going to get my inventory, I'm now simply saying my 2,080,000. I'm going to get my 2,080,000 for me now to get my inventory. For me to get my inventory, I get the difference between 2,080,000 and then the 868,400 and the 245,000. Okay, and then once you do that, remember, here's your total equity, which is the same as this one. Once I do that, you will find that the difference here becomes 966,600. And once I get my 966,600, that means my assets are now complete. Then I'm now going to say my 14,110,000 minus your 2,080,000, which is this one here. It will give me now the non-current assets here, which is 12,030,000. To give me the 12,030,000, which I have on top. Once I get my 12,030,000, remember I was not given my fixed assets. Therefore, I need to calculate my fixed assets. And for me to calculate my fixed assets, I'm now saying 12,030,000 minus my fixed deposit, which is 249,000, minus 249,000. That'll give me 11,781,000, which is what you have here. Okay. Then once you get that, that means your total assets are finished. Now, dear learners, it is very important, as I said earlier on, you need to know the format. You need to know what goes where. We're going to take a quick 5-minute break, and then we're going to come and do activity number 2. Now, if you are still following, it is very important, dear learners, that before we go on to activity 2, we're going to take a 5-minute break. I want you to be ready just so we can then do some calculations. We're going to take a 5-minute break, and then we'll be back in 5 minutes. Okay? Welcome back, dear learners. And we're going to now start with our activity number 2. Thank you so much for the feedback that we're getting on the platform and the questions that you are sending. We'll try, as I explain my activity number 2, I'll try again to answer some of your questions. We really appreciate the response that you're giving to us. Please make sure that your calculator, your pencil, your pen, as well as your paper is close to you. We're going to do now a question that relates to the cash flow statement. I know most of you love the cash flow statement. If you're ready, dear learners, let us go. Cash flow statement, activity number 2. Let's go. Now, it is adapted again from the same question paper that we were doing question number 1, the statement of financial position. Now, the question reads, Yantis Limited. The information relates to the financial year ended 28 February 2022. Refer to information A. Calculate the missing amounts indicated 1 to 3 on the fixed asset note. This is a very important question. I know there is someone who was asking, can we do the asset disposal? In this case, I'm going to try also to show how would we do that, okay? And then the information that we're given is as follows. We're given our buildings. Here is our buildings. We are given our vehicles as well and our equipment. Then we're supposed to calculate 1 and 3, and then here is 2. So the way we're going to do it, we're going to focus on our vehicles first, then we will look at the equipment later. But there has to be information given. It says, extensions to the buildings were completed during the financial year, and then additional equipment was purchased, so that means there is new equipment here. And then equipment is depreciated at 10% per annum on cost. All right? The moment you are given depreciation on cost, if you have been following some of our lessons here, we've told you the moment they say on cost, open your eyes. The examiner might be trying to test you on something. We're going to see as we do this activity. An old vehicle was sold at carrying value. So here a vehicle is being sold. So there's a person who was asking for the asset disposal. I'll try to as well answer that question in this case. And then the cost price of the vehicle was 252 and its accumulated depreciation was 172. Vehicles are depreciated at 20% on carrying value. Let us go. We're going to start now with our vehicles. We are looking for information number 1 and then number 3. Number 1 is quite easy. These are free marks that I believe that tomorrow you are going to make us proud. You can get number 1 so simple. How do you get number 1? It is simply your cost minus your accumulated depreciation gives you your carrying book value. That you know. That means you take your 2,350,000 minus your accumulated, which is 840,000. That's going to give you your number 1. Okay, please punch that in the calculator quickly. Thank you. 1,510,000. That is what you get as your carrying value. This is a free mark, okay? Okay, I know most of you got that correct. Let's go to the next one. It says disposals. An old vehicle was sold at carrying value on 30 November 2021. The cost price of the vehicle was 252, and then its accumulated depreciation 1 March was 172. Vehicles are depreciated at 20% on carrying value. Now, the moment you are given such, I would quickly come here and open an asset disposal. Okay, let me quickly do an asset disposal here. I know that's either one disposal at carrying value. So you're going to say, what is this? It is a vehicle. What was its cost price? 252,000. So I'm going to come here and say 252,000. Do we have accumulated depreciation? Yes, it's given 172,000. Okay, but then we need depreciation for this year. They say vehicles are depreciated at 20% per annum on carrying value. That means I now need to say my 252,000 minus 172,000. Someone punch that in the calculator, please. How much do you get? Thank you. 80,000. 80,000 multiplied by 20 over 100. And then when was it sold? 30 November. So you are counting from 1 March 2021 until 30 November 2021. How many months do you get there? Someone is saying 9, Mr. Simbi. You're correct. You get 9 months, and therefore your depreciation becomes 12,000. So I'm going to come here now. I'm going to add my 12,000 to the 172. I'm going to add my 12,000 here. So I have 172. I have 12,000 as well. That is now going to give me 184,000. I now have 184,000. All right. And then they told me that the asset was disposed at carrying value. That means no profit, no loss. So I'm going to get my 252 here, and then I get my 252 here. Let's assume it was sold on cash. So I'm just going to say bank. Therefore, that becomes my 68,000. That 68,000 therefore becomes your number 2, your disposal at carrying value. The other way that I know most of you would have said would be to say 252,000 minus 172 plus 12, which is equal to 68,000. As simple as that. That is how you could have gotten it as well. Disposal at carrying value. What they're saying is, give me the carrying value of the asset that we have disposed. And how do you get carrying value? Cost minus accumulated depreciation. Cost minus accumulated depreciation. Okay? And then I want us now to quickly come here. And then we already have our 1 as well as our disposals. All right. I want us now to quickly come. All right. I already have shown you on the asset disposal. And here is the amount that I had already shown you on the asset disposal. Now, I want us to quickly now come to the equipment. All right, depreciation on the equipment. Additional equipment was purchased on 1 October 2021. Equipment is depreciated at 10% per annum on cost. Okay, equipment is depreciated at 10% per annum on cost. Now, if we are doing that, it then means I have to know of the son, the sold, the old, and the new. The sold, the old, and the new. Now, in this particular case, we don't have the sold, but we have the old and the new. All right. So the old has a cost which is 640,000. That is the old. And then the new is 195,000. Those are your two. The old and the new. Now, they say depreciation is at 10% on cost. So I'm now going to say my 640,000 multiplied by 10%, multiplied by 12 over 12. You get an amount. How much is it, guys? 64,000. Can someone tell me why this 64,000 is wrong? It is because you are having carrying value of 28,000. So you cannot then have an asset depreciating to the amount of 64,000 when your carrying value is only 28,000. So what you then do, you come to, so from 1 October until 28 February, how many months is that going to be? That is going to be 5 over 12 months. And then how much does that give you? 8,125. 8,125. When you add now for the old, which is 27,999 plus the new, which is 8,125, you get a total which is 36,124. That becomes your depreciation here. 36,124. 36,124. Okay, I'm going to quickly go on to the next one. It says calculate the fixed assets purchased. calculate the fixed assets purchased. Now, with the fixed assets purchased, here is the information, and it will be easy if you can do it in this T account. I'm going to quickly go there. So it's a fixed asset account, so here is a plus and here is a minus. So I'm going to start here and say balance, go down. You're taking your total fixed assets. Remember, it's at carrying value. So you're taking the total here, which is going to be 7,988,000. And here it's going to be balance, go down, which is 8,746,500. Okay. And then if you then come onto the credit side, you're going to have the first one is going to be your depreciation. You bring in your depreciation and you have the two amounts. So you're going to add these two amounts. And when you add these two amounts, you are going to get 334,124. And then you also bring in your disposal at carrying value. You remember we did calculate it, 68,000. You bring your 68,000 here as well. Once you have done that, remember it's balance BD here, so it will also be balance CD here, which is 8,746,500. All right, therefore you get your new asset here, which is your bank. You should get 1 million rather. You should get 1,160,624. All right, that is after you have totaled here. You should get 9,148,624. 9,128,624. 9,148,624. Okay, let's quickly go on to the next one. We're going to quickly go on to the next quick one. Okay, and then there is your calculations. If you're going to do it in this way, it will also be well. Some of you know how to do it using note number 3. That is also very, very good. Now, the next one then says calculate dividends paid. Calculate dividends paid. All right. It is very easy. I'm going to be quick here. When you want to calculate your dividends paid, the quickest way is to say last year's final plus this year's interim. Last year's final plus this year's interim. So how much was last year's final? Last year's final was 180,000 plus this year's interim. But we are given total dividends, which is 552. So in the 552, when you see this, when they say dividends for the year, you must think note number 8. In note number 8, you have your interim as well as your final. So if you subtract your final for this year, which is 264,500, you remain with the interim. So once you do that, you get an interim of, someone give me the figure, 288,000. You get 288,000. So once you say 180 plus your 288, you should now get 468,000. 468,000. Okay? Let's quickly move on to the next one now. Let's quickly move on to the next one. The next one then says, calculate the decrease in the loan. Calculate the decrease in the loan. It says, the repayments are 38,000 per month, and that includes interest. So it's going to be 38,000 per month. You multiply by 12, and then that is going to give you 456,000. That is what we're paying per year, 456,000. But they're telling us that 216,000 is interest. So if you subtract interest from the total payments, the 468, they told us, it includes interest. So if you subtract interest, you only remain with the loan, which should give you 240,000. I know there are other ways that you could have done this, but I just looked for maybe a quicker way of getting this. Okay, let's quickly move on to the next one. The next one then says, calculate the decrease in the loan. Calculate the decrease in the loan. It says, the repayments are 38,000 per month, and that includes interest. So it's going to be 38,000 per month. You multiply by 12, and then that is going to give you 456,000. I want us to quickly go on to the next one. Complete the net change in cash and cash equivalents of the cash flow. Net change in cash and cash equivalents of the cash flow. This is very, very important. All right. So let us look now. Here you're going to get balance at the beginning. Balance at the beginning. And in 2021, you have 5,000. And then you have a debit. And the debit is 129. So a bank debit that's positive. That's an asset. So you're going to say plus 129,000. So if it's 5,000 plus 129, that is going to give you 134,000. But when you go to your balance at the end, you also have petty cash, which is 5,000. But you now have credit. Credit means liability. That means it's a bank overdraft. So it's a minus 125,000. So it's then going to be 5,000 minus 125,000. If you punch that in your calculator should give you a negative already, negative 120,000. All right. And then we go up. Some of you earlier on, you said you flip the signs, or you can simply do the opposite. Or you can say when you go up, you subtract. When you go down, you add. So it's going to be minus 120 minus 134. Okay, please take that. Minus 120 minus 134. So then you will get a minus 254,000. Most of you would make a mistake here, and then you end up getting a different figure. You should be able to prove it going down, that if you have a negative 254, you have a positive 134, it will give you a negative 120. So you should be able to work it from the way up as well as on the way down. You should be able to prove it out. Okay, let's quickly go on to the next question. And the next question then says, calculate the markup percentage achieved. Markup percentage achieved. What is the formula for markup? These are 3 marks now. Okay, so it should be, if you're calculating markup, it is your gross profit over your cost of sales multiplied by your 100 over 1. And your gross profit, here it is given, 5.4 over your cost of sales. How do you get cost of sales? You say your sales, which is 12.6 million, subtract your gross profit, which is 5.4 million. That will give you 7.2 million. That is what you then bring here is your cost of sales. So once you say gross profit over your cost of sales multiplied by 100 over 1 gives you 75%. Learners, let's quickly go on to the next one again. Calculate the acid test ratio. Acid test ratio. This one is an interesting one, whereby you now say it is your current assets minus stock as to your current liabilities. If you come, you're now going to say your current assets. How much is your current assets? They're given, which is your 1,323,000 minus your stock, which is your 514,500, as to your current liabilities, which is your 735,000. All right. And then if you solve that, you get your 808,500 as to 735,000. The quickest way, divide everything by what is on the right, 735. Decide that your answer must be S to 1. Remember, it has to be S to 1. S to 1. So you divide this also by 735,000. Then it will become 1,1 S to 1. 1,1 S to 1. There, you see it over there. Okay. Learners, let's quickly go on to the next one. Calculate the net asset value per share. When you calculate your net asset value per share, it is your shareholders' equity over the number of shares multiplied by your 100 cents over 1. Okay. Now, you will now say your shareholders' equity, it is your 8,840,000 over, you now need the number of shares. Okay, and then they say there were 1 million shares in issue, and then they issued 200. That means they had 1.2 million. They repurchased 50, so it's 1.2 subtract 50. That gives you 1,150,000. 1,150,000 multiplied by your 100 cents. All right, and then you should now get an amount. Please punch that in the calculator. 768.8 cents. It is important that you show your answers with the correct values. Cents. All right, NAV must be shown in cents. All right, let's quickly go now to what I think will be my last one for the day before you guys go on to write your prelim exam. All right, there is the final answer there. The next one then becomes calculate the percentage return on shareholders' equity, your ROCE. And then let's see the information that we're given. Remember the formula. It is your net profit after tax, over your average shareholders' equity. Remember, multiplied by 100 over 1. So my net profit after tax, in this case, it's 609,200 over average shareholders' equity. So I'm going to take my opening shareholders' equity. Here's my equity, 7.6 million plus my 8,840,700 shareholders' equity. And then I average it. You multiply by 100 over 1. Okay, remember this has to be averaged. Okay, in other words, if you are to bring it down, you then be having 609,200. If you get the average there, you should get 8,220,350 multiplied by 100 over 1. You should then get 7.4%. 7.4% as your return. Now, dear learners, it is very important as we are preparing for the big day tomorrow. I know you have your calculators ready. I know you have everything that you need for tomorrow's exam. Here's a few things that you don't have to forget. You have to remember all the work that you've done in class. You have to work through past exam papers. You have to get to the exam center as well on time. Please do not get there in a rush. You need to prepare and get to the exam center in time. I do have so much hope that you guys are going to make us proud tomorrow. Remember, don't forget your calculator. Don't forget your stationery. Be at the exam center on time. And when you read through the question paper, make sure you have your answer book ready as well. You read, you compare, you see what is it exactly the examiner wants me. Are they demanding that I do the whole balance sheet? Is it a part? Is it part of the income statement? What exactly is it? Read through and also check with the number of marks that are provided. I do believe tomorrow is going to be an exciting day, and I know you're going to make me proud tomorrow. Dear learners, until we meet again, please have a very beautiful day today and make us proud tomorrow. Until next time, from me, cheers. It is goodbye.